Welcome to the new market forecast for this week. As always, we're going to start off with the fundamentals, then move on to the technical side. So let's start off with the pound. As you guys continue down into this article, it's going to give you a little bit of more details, but a high overview summary of what this article is basically talking about is that it's highlighting the growing concerns over the British pound as traders are preparing for further significant declines, potentially up to 8%. And this is mainly due to the UK fiscal issues, the persistent inflation, and the high borrowing levels that have weighed heavily on the pound, and it's driving the option traders to bet on its continued weakness. The demand for the contracts betting on the pound has fallen below the $1.20 and even as low as $1.12. And that has mainly happened because, with comparing the current situation to past crises such as 2016 Brexit, even 2022, the UK budget fiasco, and all of that was even more emphasized with the job data that we got from the US on Friday, where it was stronger than expected, and that bolstered the US dollar, and it led to an increased expectation that the Fed is going to maintain those higher interest rates for even a longer period of time. And because of that, as you continue down, they have a chart for GBP USD. It saw a sharp drop to that 1.22 level. And while, some strategists, they're expecting that there's going to be a slight recovery to 1.26 by the end of the quarter, majority of the analysts, they are including, Deutsche Bank is predicting that there's going to be further downside for the pound, and they're recommending, more short positions against the pound. So if you're trading GBP USD, if you're trading GBP JPY or any pound pairs, this is a key article for you guys to read. Why do you care as an investor? So let's say, for example, like I said, GBP USD. If you're trading GBP USD, then as an investor, this is very important because this is pretty much signaling that there's going to be weakness for that pound. And that's, again, due to fiscal instability, the rising bond yields, the expectation of slow economic recovery, and that significant increase in demand for options betting on a lower pound. And that essentially is suggesting that traders are anticipating further declines. So if you're looking for, your trades on GBP USD, when you're looking at swing trades or anything like that, you're potentially going to be mostly on the sell side. If you're looking at GBP JPY, for example, same thing, the pound's weakness against the dollar, it's going to spill over into even GBP JPY against its performance against the yen. So with GBP JPY, you're going to, again, see further downside as investors are going to start moving away from the UK, and they're going to start moving away from the pound, and they're going to start moving into the yen instead, which is also seen as a safe haven currency. So as the UK's fiscal concerns are going to continue to grow, you're going to see more downward pressure on GBP JPY. Overall, when you're looking at the global sentiment and the US dollar strength, this article is pretty much saying how strong the US economic data has been, particularly in the job market, which was one of the main concerns when it came to the Fed, cutting interest rates, things like that. And, it's leading to expectations that the Fed is going to maintain their higher interest rates for a longer period of time. In turn, that is strengthening the dollar at the moment. It's making it more attractive relative to other currencies. And so when you're looking at, for example, we're going to be looking at USD JPY chart, we're going to start to see that that is in turn going to be rising as traders are going to be flocking to the dollar because of its higher yield. And the Japanese yen, can maintain subdued due to Japan's own low rate policy. So the divergence between the current rates that the dollar is sitting at versus the yen. If you're looking at US30, that's going to be another chart that we're going to be taking a look at. So why do we really care about this news if you're trading that as well? And the market sentiment overall. When there's a weakening pound, that's going to potentially signal broader economic instability in the UK, which is going to affect the overall global sentiment as investors. And so if there's any global concerns around fiscal management in other economies like the UK, that can overall dampen the investor sentiment. So, this is not going to have an overall direct impact to US30, but what you're trying to understand is what is the overall global sentiment as an investor? What does this mean on a global level, right? And so this could result in more of a risk-off behavior, for example, from investors, where they start to pull away from equities, right? They want to be going to safe haven currencies, like the yen, or if you're trading the US dollar against the yen, something that's going to give them a higher yield. So overall, this is basically signaling heightened uncertainty, which is going to make, pairs like GBP USD, GBP, JPY, US30, all these different pairs, a lot more volatile. But this also presents opportunities and risks for both traders, as you're going to start to see better entry points when it comes to swing trades, right? But you also need to understand what are the potential significant market risk here. So like I said, I kind of pretty much gave you guys an understanding of how is it going to impact, the pound USD, GBP JPY, USD JPY, and even, US30. So that's pretty much how you would understand this article, but, continuing down, you're going to continue to see more details about this. And I would highly suggest that, you guys pretty much copy paste this title, and you can find the free version if you're not on Bloomberg on the paid version of this. Next thing that we're going to move on to is going to be some tariff news. We have been following this for the last few weeks, especially with Trump, coming into office pretty soon on the 20th. So we know that there has been a lot of news, a lot of, speeches, a lot of commentary by Trump basically talking about these tariffs that he's going to impose when he takes office. So in this article, the Canadian Prime Minister is responding to that potential trade war threat from US President-elect Donald Trump, and he is indicating that if Trump is really going to follow through on his threats to begin a trade war, then Canada would impose counter tariffs on US goods. And that includes, with Trump pretty much saying that he's going to follow through with 25% tariffs on products from Canada and Mexico. This is going to include basically the fact that Canada is the largest customer of US goods, and about 35 states within the United States, they are the #1 exporter for those 35 states, and anything that thickens the border between Canada and the US is going to end up costing American citizens and American jobs. And so that basically just means, can we expect higher inflation? And that's one of the main concerns that a lot of people have, a lot of these officials have, with Trump talking about increasing any sort of, or imposing any sort of increased tariffs across all these global economies, right? So he is also basically saying that there's an importance of the US-Canada energy relationship, particularly in Alberta's oil exports. And he said that, Canada could get to the point where they're going to take action to limit those energy exports if necessary. So why do we care, once again, about this? As you continue down, same thing, you're going to get a lot of details about this as well. But why do you care? A lot of volatility, once again. And the main thing is, what kind of sentiment is it setting up for investors? So the possibility of a trade war between the US and Canada is a significant concern for investors, particularly those who are in these industries or who are investing in industries related to, cross-border trade. So that could be agriculture, manufacturing, energy. These are going to be especially impacted. So if the tariffs are imposed, it could hurt both economies, and it could disrupt supply chains, affecting stock market performances, things like that. If you're looking at USD CAD, for example, that's obviously going to impact that pair heavily. So if tensions rise, the Canadian dollar could also weaken due to the uncertainty. And once again, the dollar might gain some strength, the US dollar, as a safe haven during geopolitical instability. So this is also going to impact any pairs that you guys are trading that has the Canadian dollar or the US dollar. If you're looking at commodities, like we trade gold, for example, that is also a safe haven asset as well, right, during geopolitical uncertainty. So then that could also affect gold prices, where you might see more investors flocking in to gold. And that's pretty much what this entire article is about, and even the following one. So this is from IMF here, where this article is pretty much saying the same thing that we have been hearing from FOMC members, that we have been hearing from leaders of other countries when it comes to Trump and when it comes to these tariffs, where here particularly is the managing director of IMF, and she's talking about the global economic impact of Trump's tariff threats. She's basically saying that there's a lot of uncertainty surrounding his trade policies, which is already driving up long-term borrowing costs globally, with bond yields rising sharply, and the US dollar is also strengthening because of that. So Trump's plans to impose tariffs on imports from China, Canada, Mexico, and a lot of other countries, basically, it's raising more fears about supply chain disruptions, inflation, and slower economic growth. And potentially they're seeing that it could lead to a reduction of global output by 0.5%. Also, it talks about more of that US dollar strength could increase funding costs, could increase because of the funding costs for emerging market economies, particularly those with lower incomes. And so the IMF's global growth forecast is still subdued with disparities across regions, but the US is doing better than expected, while the EU, India, and China are facing economic challenges. Once again, why do we care as traders? Because this is relating directly to market volatility. So the prospect of new tariffs, especially with the new administration, it's going to lead to market volatility. It's going to impact those stock indices and the pairs that we're trading. So tariffs, once again, disrupting global supply chains, raising costs, leading to inflation. All of that makes investors a little bit more cautious about any sort of future growth. And they're going to be flocking towards something that's a little bit more safer, something that's going to give them a higher yield on their investment. So, looking at US dollar, looking at gold, looking at yen, some of those safe haven currencies and commodities. The dollar obviously strengthening due to the expectation of higher interest rates and potential for higher tariffs. A stronger dollar is also going to have, effects depending on, what kind of pair that you're trading it against. So if you're looking at USD JPY and you're trading GBP JPY, you're always going to be watching the dollar's movement a lot more closer. So while, for example, for USD JPY, that could push a little bit higher because there's a lot more strength in the dollar, you could see that GBP JPY or other JPY pairs could also face pressure if the yen starts weakening against the dollar. And this is going to have impact on emerging markets, on commodities, when you're looking at gold, for example. So investors are typically buying into gold during economic uncertainty or when borrowing costs are rising. So if emerging markets start to face higher cost or slower growth, then those commodity prices are going to become a little bit more volatile. And that's going to impact gold, of course, and the overall broader market sentiment. So all these kind of things, so far what we have been seeing is there's a lot of uncertainty that is setting up for investors. And we're starting to see that on the technical side too. So when we jump over to the charts, you're going to see that there's consolidation, that price is tapping into those all-time high, all-time low levels. And you're starting to see retracements happening. You're starting to see that there's profit taking that's basically happening there. Let's move over to the US inflation and then the job data that we had coming out last week on Friday. So this article overall saying that the US inflation data and its implications on the broader economy and financial markets, especially with respect to the Fed's policy stance. It's basically talking about all this stuff and talking about how inflation has appeared to cool down a little bit in December. But when you're looking at the core CPI, the consumer price index, excluding food and energy, it remains stable at that 3.3% year on year. And it's showing little progress in reducing inflation. So this, along with the strong job market data that we got, where over 250,000 jobs were added in December and unemployment dropped down, that is still suggesting that the US economy is still resilient and that is showing a better US job market, which is one of the mandates of the Fed, right? Any central bank, price stability, and the second one is maximum employment. So you're starting to see that drop happening when it comes to unemployment numbers. The Federal Reserve is also taking a cautious approach to these rate cuts. So a lot of the FOMC members who were speaking, they were pretty much saying the same thing, that Trump is going to come in, and if he does increase those or he imposes those tariffs and things like that, then we would have to kind of hold out the interest rates. That is going to lead to higher inflation. And there's an inverse relationship between interest rates and inflation, where if inflation is increasing, then the Fed is going to have to increase interest rates as well to combat that. But in order to avoid that, because we have been in that cycle of cutting interest rates, you might as well just hold it out at the current level as long as you can until you have the necessary data to back up further rate cuts. And so we're expecting that retail sales are going to stay firm. The manufacturing sector is showing signs of stabilization, and the central bank policies all around the world, they're playing a significant role overall in shaping these market dynamics. And there's a lot of key data points that we're going to be expecting to see from Canada, China, UK. So when you continue down here, they've kind of broken this up into all these different sectors or different categories, which I think is amazing. So once again, I would highly suggest that you guys come back and kind of read up on this article, but I would just want to give you a quick little summary about all of this. So once again, why do you care as investors? Once again, looking at, what is the Fed doing? That's going to be very crucial for your investments, whether you're trading in the equities, whether you're trading with the US dollar. So with inflation showing signs of persistence, for example, and a strong labor market, the Fed is going to be less likely to be aggressive in reducing those rates, which means that those borrowing costs, they're going to remain relatively high for extended period of time. So this affects obviously US30, those equities, because this could mean that there's lower economic growth and there's potential weakness in the index, especially in sectors that are more sensitive to higher interest rates. If you're trading USD JPY or GBP JPY, the stronger than expected job data, as we saw in the pound news that came out, and persistent inflation, it's going to push the US Treasury yields higher. So that's going to likely strengthen the dollar against both JPY and the pound, as higher yields are going to make US assets more attractive to investors. And specifically, if we're looking at USD JPY, we can expect a push happening there because investors are going to be seeking higher returns in the US relative to Japan, right? Where the interest rates are still low, the monetary policy is still more accommodative compared to other global economies. If you're looking at GBP JPY, a stronger US dollar could also exert upward pressure because of that. So while the pound is still under pressure due to the ongoing inflation, the economic concerns in the UK, you could see a big of a push basically happening in the yen compared to GBP JPY. So another drop basically happening there. When you're looking at gold, pretty much the same thing. It could, as inflation persists and interest rates stay higher for a longer period of time, gold is also going to, face pressure from investors due to the opportunity of cost holding non-yielding assets, right? And it could struggle if investors prefer assets that offer returns, such as bonds, right? But if inflation continues to rise and there's expectations of inflation to continue to rise, or there's economic instability that's increasing, then gold is going to act as a safe haven. And of course, this is where the investors are going to go. So this is pretty much how this article is also going to impact depending on what kind of investments that you're looking for. Coming on to the equities, and then this one is the S&P, and then the next one is going to be the Asian stocks that we're going to take a look at. So this is US equities. As we continue down into this article, it gives you a pretty good summary of what we have seen so far, but I'll give you a very high overview instead of scrolling through the whole thing line by line. Basically, what this article is talking about is the recent shift in the market dynamics as the treasury yields are increasing or rising above that 5%. And that is causing a lot of market volatility, especially in the stock market. And we saw a massive rally in the S&P 500 from 2023 to 2024. And now investors are faced with rising yields, particularly in the 20-year and 30-year US Treasury bonds, which are reaching currently at the levels that we have not seen since 2023. So those higher yields are making treasuries more attractive, which in turn is making equities less appealing to investors. And it's leading to a sell-off in the stock market. The bond yields are up about 100 basis points, I believe. And then since mid-September, so we can actually scroll back up and it'll tell you exactly that, like 100 basis points or so. It's pretty much in this article, so as you guys continue down, like right here, about 100 basis points since mid-September. Even as the Fed has been cutting interest rates. So that is usually a scenario that we have not seen in a very long time, or it's just unusual according to historical trends. The 10-year treasury yield, which is approaching that 5%, it's also seen as a psychological barrier that could trigger a sell-off in stocks. Bonds are becoming more attractive with higher yields. Investors are beginning to question the high valuations of stocks, taking profits from the previous trades or positions that they're in, and it's leading to concerns over a potential market correction, right? And so analysts are overall predicting that there's going to be a bit of a bumpy period for these equities, especially with the growing uncertainties tied to inflation, government debt, and the incoming Trump administration policies. Some investors are, seeking refuge in these mega cap tech stocks, such as the Magnificent Seven. I'm sure you guys have heard about those. Google, Amazon, Apple, Meta, Microsoft, Tesla. There's another one that I'm pretty much blanking out on. So as you continue down, this is pretty much what they're talking about here. Let's continue further down here. Any potential red flags or anything like that. Those are, again, the concerns about inflation, the federal deficit, and the policy uncertainty around, what is pretty much Trump going to do when he takes into office. So again, why do you care as an investor? We're looking at interest rates and the bond yield impacts. So as there's rising bond yields, particularly on US Treasuries, it's gonna directly affect the effectiveness or attractiveness of equities. And as these yields continue to increase, the relative appeal of stocks is going to continue to diminish as well, leading into a market correction. So if you're trading something like US30, obviously this directly impacts your trading decisions. If you're looking at USD JPY or GBP JPY, so again, higher US Treasury yields, they're going to typically strengthen the US dollar because investors would be demanding higher returns, right? And so that's going to put an upward pressure on USD JPY. And when you're looking at GBP JPY, we have discussed that in the previous articles already. So it's going to be the same exact thing. And it's just going to make the rising yields, bond yields are just going to make the US a little bit more attractive to those foreign investors, which is going to be boosting the dollar. And then let's continue to the next article. So pretty much a good summary of that. So here we have the Asian stocks under pressure after blowout US jobs. So that is the job market data that we got on Friday, once again, NFP. And so a quick little summary discusses the strong US job reports again, and that has caused traders to reassess the expectations for the Federal Reserve, the rate cuts, and that overall is, we can see pretty much with all the articles that we have gone through, how that is having a ripple effect across all these global markets. So as a result, the stock markets in Asia are also set for declines, with Australia seeing a drop of more than 1%. Futures for Hong Kong are also lower. In the US, the stocks also sold off when the market opened up today, with the S&P 500 and NAS 100 both falling. Bond yields in the US and Australia climbed as the market prices in the possibility of higher rates for a longer period. The US dollar continued to strengthen, hitting at a 2-year high against most major currencies, and the yen is also gaining due to the expectations that Bank of Japan might adjust its inflation outlook. So here are basically the key points of what are being discussed in this article overall. Why do you care as an investor? The US30 especially, and the stock market sentiment when you're looking at equities, all that, the strong US job reports, they're indicating that the US economy is resilient. That's leading to the Fed maintaining higher interest rates for a longer period of time. That is causing a drop in US stocks. So when you're looking at S&P 500, NAS 100, spilling over to US30, when you're trading USD JPY, as I've mentioned before, strong dollar, GBP JPY, same thing, gold, all these things. And overall, when you're looking at commodities in the global markets, we're seeing that for gold, for example, a rise in those crude prices are creating inflationary pressures that are supporting gold as investors are seeking more protection against rising costs. But if the stock markets continue to decline, then the traders are going to shift towards the dollar for safety. Oil and gold are going to be facing more pressures, basically downward pressures. So that's pretty much it on the macro fundamental side. Let's go over the economic data and take a look at what do we have going on this week. So today we had the Japanese bank holiday, but of course the Asian session was still open because you have the New Zealand dollar, the Aussie dollar, and the Chinese currencies with some low impact news. Going into tomorrow, a lot of low impact news overall as well. If you're trading the yen, you're going to be paying attention to the current account and bank lending. So these are pretty much economic data that is not really going to have a huge impact on your investments, on your trades, on your charts. But it's good to know because this sets up pretty much a good understanding of where the economy is and where we headed. This week is inflation data heavy week. So starting on Tuesday, you have inflation data coming out from the producer side. So as we have always talked about consumer being the core of the economy, it starts off with the producers, ripples down to the retail side, and then it affects and spills over onto the CPI, onto the consumer side. So that's why this is going to be a good data point to watch out for, especially if you're trading any USD pairs on Tuesday. On pre-London session as well, you're going to have a ton of inflation data coming out from the pound. You have CPI, core CPI, PPI, input and output, and RPI coming out. So inflation from all three of these, so consumer, producer, and the retail side coming out. Then going on to Wednesday, you have CPI coming out month over month, the core CPI as well, and the year over year. So as you can see, we're expecting that inflation is going to increase on the year over year. We're maintaining, and then the core CPI, so excluding food and energy, that's going to drop down to 0.2. So that's not to say that inflation has slowed down. It just means that it's increasing at a slower pace. That's pretty much it. Then you have some FOMC members speaking as well on Wednesday. And then if you're trading an Asian session with the Australian dollar, you have employment data coming out. And then pre-London session, you have GDP data coming out from the pound. And then on Thursday, you're ending off with some retail sales coming out from the US, unemployment claims. Every Thursday, you get that. We're expecting that a few more people are going to be on unemployment claims. So not a huge jump, honestly, but pretty significant to watch out for still. And then Friday, we just ease out and we'll close out for rest of the week, pretty much at low impact and medium impact data points. So the main trading days for us, for me particularly, would be around Tuesday, Wednesday, and Thursday. Let's move over to the technical side. So let's start off with US30. We have a nice bullish momentum to the upside. And as we talked about from the fundamental perspective, that there's a lot of profit taking. We're starting to see a decline, drop, etc., all that stuff. We're seeing that on the technical level, right? So you see that massive top wick rejection on the previous quarterly candle, came back and closed doji like a bullish doji here, but still quite weak in comparison to the other strong bullish momentum that we have seen. So based off of the month or the quarterly time frame, what I'm going to do is mark off this bottom wick rejection right here for that previous quarterly candle. So if price breaks below that, then we know that we have stronger sell opportunities and more downward pressure to come back down here. But as we drop down to lower time frames, we will see how we have a pretty good range that we can still scalp and swing trade as price is dropping back down into that 41,735. Another level that I'm going to mark off here is going to be that candle body open of this bearish candle. So let's say right at that 42,516. So that is the high. That is pretty much if price breaks past that, then we know that this quarterly candle is also going to be bullish, and we can look for buy opportunities to come up and fill this wick here. Higher the time frame, the stronger these levels are going to be. So be very careful as you drop down to lower time frames. When we come onto the monthly time frame, December closed out with a little bit of a top wick, pretty much respecting November's high right here, and then push back down, close right above this 42,516 level. This month, January, we pushed up a little bit higher. We had a little bit of good bullish momentum, but then we flipped back down. So we still have this range to come back down into this area and pretty much look for scalps, day trades, swing trades, things like that. But once again, if we break past that, we have clean momentum here on the monthly time frame to come back and tap into these previous higher highs that were formed. Come onto the weekly time frame. Insanely bearish pressure since December. We had a little bit of push up around Christmas time, basically, and then going into the end of the year, same thing, bearish push down. We closed above this area, as you can see, for the last 3 weeks of December, basically. Price just closing above this, and then in the first week of January, we got a top wick rejection, respecting previous highs, came back down, broke previous lows, and then we also had this little area of price respecting support that finally price came back down and closed right into that area. So we have a lot of bottom wick rejections, but candle closures above this, right? Still showing us that there's enough bullish momentum to keep pushing down. But this week already, we have a little bit of a top wick and then pushing down. So if I was to mark off another level, I would do this bottom wick here on the current weekly candle. That tells me that as soon as that's broken, the next clean move is coming back down here, right? So you have a pretty good momentum here once again, for a downside, for a quick scalp, day trade, anything like that. You come onto the daily time frame. So I would say anything in between here, I would not be looking for a trading opportunity. I would be looking for scalps turning to swing trades. That's why for my style of trading, I would not be looking for a trading opportunity here. Unless price can break above the zone and then continue back up bullish, I'm going to adjust this right above the current daily high. So if price breaks above this, then I can look for a buy opportunity to come back up here. But if price breaks the previous low, then I'm looking for a quick scalp or even day trade opportunity to come down. If price breaks past that, then we have really good momentum to the downside, and we can target some of these lower levels for our further swing trade opportunity sells. You come onto the 4-hour time frame. a little top wick being formed here. So on Friday, we closed right at that zone, kind of breaking the previous 4-hour lows here. So that indicated, continued seller's pressure. And that's what we continued today. We had a little bit of top wick and the price is pushing back down here. So as you can see, as you drop down to lower time frames, you have enough of a range to look for a quick scalp or even a day trade opportunity. So even if I come onto the 1-hour time frame, we're respecting a nice little resistance here. So as long as price can, maintain below this area, we have those sell opportunities. If price just kind of hangs around in this area, let's say going into Tuesday with inflation, then that's a lot of consolidation. And then depending on the economic data release and the market sentiment, then we have really good trade opportunities in one direction or another. So whenever price breaks out of consolidation, there's always really good volume that follows, right? And so that's what we can capitalize off of. Let's come on to GBP, JPY. Same thing, we're going to start off on the quarterly. So even this quarterly is pretty much sitting at its low. So I'm going to mark off these candle body lows that are being formed here. Let's say 192 flat. And then I'm also going to mark off the candle body open for this current quarterly candle. Let's come on to the monthly time frame. So on the monthly time frame, we see a ton of consolidation. Following historical market patterns, we see that whenever there is consolidation and price breaks out of it, there's a ton of volume, right? So we know that whenever price does break out of this consolidation, there's going to be a ton of volume. And if price keeps pushing back down bearish, then we would be targeting on the monthly time frame these little support areas here at 19300. Let's say price just makes a bottom wick here and then kind of just flips back up, continues pushing. Then we're looking for buying opportunities to come back into that 196,800. From a technical perspective, we don't have enough buyer's pressure just yet. And you can see that from the last few monthly candles where price, fails to break the previous highs. If anything, it's just creating those lower highs, right? And we're breaking those previous lows, so creating those lower lows as well, even though we're still in consolidation. So right now we're pretty much waiting on either sellers or buyers to dominate, where we can look for those continued sell opportunities. When you come onto the weekly time frame, we start to see how price came back and tapped into the same exact high, and then we saw another sell-off happening here. This week we already have a little bit of a top wick, and then we want to see if price can break this little support area of 192 flat, and then look for those continued sells to come back down into that 190,300 level, and you have almost 100-200 pip range that you can take advantage of. So from 192 to 190,300, you have a 200 pip range that you can take advantage of. And then that's when I would be a little bit more careful. I would want to wait for a proper break and retest on daily 4-hour time frames prior to looking for a continued sell opportunity. Because even within this, if we're looking at the structure, it's still a little bit bullish here based off of the daily, weekly levels, where price is still creating those higher lows and it's still breaking those highs, right? Creating higher highs still at this point. So if anything, all we've done is at one point just came back and respected those previous highs and then started this entire corrective move of this massive bullish momentum. So structure is really not broken here just yet. If anything, we're just capitalizing off of a quick correction momentum. Come on to the 4-hour time frame. That's a massive seller's pressure after this last high. From that point on, and just continue to push down. The current 4-hour, a little bit of a top wick, and then it seems like it's starting to break below this. So I wouldn't really look for an entry until I see an hour closed. So we only have 16 minutes left until this hourly candle closes. I'm going to wait for that candle closure and then, look for a continued move down. This is GBP, JPY, there's a Japanese bank holiday, so I would probably not be trading today on this. So I would be a little bit more careful, a little bit more cautious when I'm looking for any investments for my GBP, JPY, and my USD, JPY trades, right? So I would be a little bit more careful. I would wait for better technical setups. So break and retest. This is not something where I would take an impulsive move or an impulsive entry on. Wait for proper break and retest, wait for confirmation across multiple different time frames, higher time frames and down. So like 1 hour, 4-hour, daily, weeklies, things like that. Higher the time frames, again, the stronger the levels, right? So we need to be a little bit more careful as we're going across and breaking past a lot of these levels here that we have been marking off from higher time frames and down. For USD JPY, coming onto the quarterly, we are seeing from a fundamental perspective, we saw how, we were going to expect a stronger bullish momentum, bullish push on the US dollar, and that's exactly what we're seeing here. So what I'm going to do is mark off the candle body low where this candle started forming. Let's say 157,100 flat. And then I'm also going to mark off the top wick rejection because that's the highest that price has been this quarter already. let's say 159. You come onto the monthly time frame, you start to see a massive push up. That's pretty much where that monthly candle closed. The new one started forming. We're already breaking previous monthly highs, but we rejected that and we pulled back a little bit. We have rejected that previously as well, right? So when we drop down to lower time frames, what we want to see is price first. This would be our target for any buys. So price break past this level, and then we can look for a continued move up. From the current price up to that level, you have about 75 pips and then a continuation of coming into almost 150 pips that you can trade. But again, the fundamentals would be the drivers here. Coming onto the weekly time frame, once again, you see a lot of consolidation. And whenever there is consolidation, there's a ton of volume that follows, right? And so even here where you had this little break and retest, but the candle body's kind of still closing around the same range, there's a ton of volume that followed after, right? So that's pretty much the type of setup that we're seeing at the moment. So this is why we need to be a little bit more careful. Is this simply just a bottom wick and then price pushes back up and then we look for that buying opportunity, or we're going to see a bottom wick rejection here? Again, you have a lot of inflation data coming out from the US this week. So just be a little bit more patient. There's going to be more trading opportunities for us. Coming onto the daily time frame, you got that nice top and bottom wick rejections here, but this is that volatility from Friday with NFP data and all that stuff. And then today already a nice top wick and then price flipping back down. So we still have a pretty good range if you're looking for a scalp or anything like that. What I particularly want to see going into tomorrow's session, since I mostly trade London and New York overlap, is can price respect this area as support and then look for a buying opportunity to the upside? Because exactly how GBP JPY was, even here, we're starting to see that even though price is respecting those previous support areas, it is still maintaining a bullish structure here. So that's where you had the candle closures. The next one came up a little bit higher. It did respect that bottom wick rejection with that bottom wick rejection, the previous supports. And then the next one, same thing, came up and is still making those higher highs and higher lows, right, at this level. So what I want to see is, can price come back down, respect this area support, and then push back up for any buying opportunities? If not, can we come back and close below this 157 100 level or around 157 flat? And then I want to see some sort of a retest, so a top wick rejection or a break and retest being formed here on lower time frames, and then look for a sell opportunity to come back and tap into these areas. Drop down to the hourly. A nice sell-off that has started forming pretty much right now with the top wick and pushing back down. But once again, it's the first session of the week, so I do want to give price enough room to price in any sort of fundamentals that have come out over the weekend already, and also, you know, the Japanese bank holiday as well. And so coming into tomorrow's London and New York overlap session, that's when I would be looking for my trading opportunities. Come on to gold. So gold, we're starting to see that push happening. Again, a lot of uncertainties and things like that happening globally with the market sentiment. You have that 26.96 level, let's say at 0.7 flat. Top wick rejection on the current quarterly candle. And then I'm going to mark off the candle body lows at that 0.3 mark. Come on to the monthly time frame. And then we saw a massive bullish momentum to the upside. Some profit taking basically happening here in November, push back down. We're still closing above this 26.23 level, 0.3. And then last month, same thing, nice top wick, but we still close at that level. This month, we make a little bit of a bottom wick and we're already pushing back up. So what I want to see as I drop down to lower time frames is pretty much, can price break past this 26.96.7 level for continued buy opportunities, or are we looking for a continued push to come back down? So when I'm looking for any sort of scalps or day trades or even swing trades, what I want to see is the current weekly low here being broken, and then we have that continued sell, really good momentum to pretty much come back into these areas here where we have those candle body closures, that resistance, and then you have these wick rejections to come back down. If this is simply a bottom wick and price breaks that high and pushes back up, then I'm waiting for this level here to be broken and then continue to the upside at the bare minimum to come up and fill that weekly top wick here. Come onto the daily, still a nice bullish momentum to the upside, right? So price is holding onto support, creates a higher low here, and then we have this short-term bear structure. So once again, are we going to have enough bullish momentum to come back and tap into the same level multiple times as we have done here in the past? And we are also respecting that little bit of consolidation support. So that would be the next target, my take profit level, if I'm looking for any sort of buying opportunities on gold as of right now. So we have, again, a nice bullish momentum to the upside, even on the 4-hour. We're starting to see a little bit of retracement. Are we just seeing that this area is going to be respected as support and then price pushes up? Either way, sells would be below this level, buys would be above that. That's pretty much it for today's weekly forecast. And if you guys have any questions, as always, feel free to reach out to me on Instagram or just comment below. My Instagram is at SharmaFX. I'd be more than happy to answer any questions that you guys have as you guys are trading throughout the week. And we will have a simulation session as we're continuing pretty much that account growth from last Friday. And we will have that simulation session on Friday at 4:30 p.m. PST, 7:30 p.m. Eastern time. So I will see you guys then for that. I hope you have a great rest of the week, and I hope you guys are trading safe and make sure that you guys are practicing proper risk management. There's going to be a lot of trading opportunities for you guys this week.